To maximize the benefits of the long-legged doji candlestick pattern, what's really important is that you focus on identifying and interpreting it where it appears on the chart. What is it? Again, single candle pattern. And it occurs when the open and closing prices are the same or very close to being the same. And the highs and low prices, they're a fair distance from each other. So this will create a cross-like shape with a long upper and lower shadows. So to identify it, you really want to find a candlestick that has a very small or no real body. That's the difference between the open and the closing prices. And long upper and lower shadows. And that's the difference between the high and the low prices. This is basically the range. So the length of the shadow should be at least twice the length of the body. And so this indicates that the market's been pretty volatile. Both the bulls and the bears have pushed prices up and down, but ultimately ended up at a stalemate, pretty much the same level. So what does it mean? It's more or less neutral. It suggests a balance between market participants. So it indicates indecision in the market, but it could signal a potential trend reversal, especially when it appears after a strong trend. And the context of the market matters. So if it appears after a bullish trend, it suggests that the bulls are losing momentum and a bearish pattern may be on the horizon. If it appears after a bearish trend, again, it's the opposite. Bears are losing momentum. Bulls could be taken over. So here's a couple of trading strategies that you might find useful. And one is the long-legged doji with Bollinger Bands and Volatility Filter. Now, Bollinger Bands, we have a YouTube video about that. It's a popular technical tool. You can identify overbought, oversold conditions in the market. So to use this strategy, you would need to wait for the long-legged doji to appear and then confirm it with the Bollinger Band. So if it appears outside the upper band, it suggests that the market is overbought and a bearish reversal could be coming around the corner. Outside the lower Bollinger Band could mean that the market's oversold and we're looking at a bullish reversal. Second one is using a volatility filter. It's pretty straightforward. You want to wait to see the long-legged doji appear at some market structure and then confirm it with a volatility filter. Appears at a support level, we would consider it a bullish reversal pattern and look long. If it shows at a resistance level, we might be looking short. So let's take a look at some important scenarios here. We can see a bullish reversal. So this is going to appear after a prolonged downtrend, suggesting the bulls may take control of the market. We can see a bearish reversal. This appears after a prolonged uptrend, suggesting the bears may take control of the market. And then we have the indecision. And this is going to appear after a period of volatility or during a sideways market. This is going to indicate indecision and uncertainty about what's going to come next. So what about this long-legged doji compared to other dojis? Because this is just one of many other ones that are available to trade. So here are some for you. It's a standard doji, equal opening and closing prices, small real body, looking at indecision. A gravestone doji, long upper shadow, no lower shadow. This is bearish. Dragonfly doji, long lower shadow, no upper shadow. That's bullish. Now listen, don't get too hung up on the names or too specific with the criteria, because like with anything, chart patterns, individual candlesticks, if you understand why they form and what it means in the context of the current trend, that is more important. So how can we improve trading with it? Now remember, it is a single candlestick pattern. We don't want to trade it in isolation. So consider the following: oversold and overbought. It's one way to improve it. Now, oversold conditions occur when the price of that asset falls too low. It indicates that the selling pressure may have been exhausted. A potential reversal could be in the cards. Overbought, price of an asset goes too high too fast, indicates that the buying pressure may have exhausted for now, and price moves in the opposite direction. That could be coming. And to identify these oversold and overbought conditions, so many different indicators you can use: RSI, the stochastics oscillator, Bollinger Bands, we talked about those. Now, volatility, this is a measure of the degree of change of an asset's price over time. High volatility indicates the market is more uncertain, it's unpredictable. Low volatility indicates the market's a little bit more stable. So to identify the volatility of the market, use indicators like the ATR, the average true range, and Bollinger Bands. Now, time. You can improve this pattern for trading by considering the time factor. Time is an essential element in trading in general because it influences the market direction and the trend. So for example, the long-legged doji pattern appears on the daily chart. That may indicate a potential trend reversal, but that same pattern on the weekly chart, that could suggest indecision or uncertainty. We don't know. So wrapping this up, it can be a significant candlestick pattern, depending on where it is. And you can identify and interpret this pattern using different techniques, combined with other tools like the Bollinger Bands talked about, volatility filters, oversold, overbought. You can actually use it in Forex with considerations for the market entry and profit targets. But remember, you got to have a full trading plan. And it's not 100% accurate. Nothing is. But it does provide you with some valuable insights into trends. And it's something you should consider looking for. And we talked a little bit about indicators. And a lot of people use too many indicators. So let's try something different here. This is the ultimate guide to price pattern trading. It's a free guide that I put together a while back, and it's been one of our most popular free giveaways. Find ideal entry points with some lower risk. These are patterns that you can use on any market. The link is to the left, below in the description. Again, it's totally free. Download it. Make sure you hit like and subscribe, and we will talk to you soon.